following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. We thank you for joining us today on 94.1 FM WNBU as well as cable TV 10 in New Bern. We've got a great show lined up here for you today. Before we get into the show, we'd like to give out the contact information as we always do. We love to hear from our viewers and listeners. The phone number here at the show is 252-633-0107. Our email is allthingsmoney@dlblain.com. And of course, you can visit us on the web at www.dlblain.com. That's DLBLAIN.com. Big contact button, contact us button up in the upper right-hand corner. You'll also find some information on myself and the show on the website there. We'd also like to thank Bob for running the engineering board today for us. He always does a great show. So without further ado, let's get right into it. This was a great article that appeared June 12th in the Wall Street Journal, and we constantly talking on the show about people that trying to invest on their own, especially people with a shorter time frame. People that are day trading, people that are buying stocks and think they have some sort of edge against the other, 5 million professional investors around the world. We generally advocate that people take a passive type approach to investments, focus your decision on the asset allocation. Anyway, another piece of evidence for this, the headline was, traders pay for an early peek at key data. And it goes on to state, on the morning of March 15th, stocks tumbled on the news that a key reading of consumer confidence was unexpectedly low. One group of investors already knew that. They got the University of Michigan's consumer report 2 seconds before everyone else. Infinium Capital Management, a high-speed trading firm in Chicago, used the information to launch a wave of trading in futures contracts. And just one example of this activity that followed in a single second, according to the Wall Street Journal analysis, traders from various firms bet nearly 7 million shares that equity markets would decline. And this is exactly what happened when the news of the survey became widely known. All right, so that's the introductory paragraph. So let's just kind of summarize here. The University of Michigan Consumer Sentiment Survey, it's a very important survey that comes out. The data is collected, collated, produced, and reported by the University of Michigan. It's been around for a long time. I think it started maybe in 1964, and they poll consumers to get a feel for their feelings toward the economy and purchasing things, and it can really move the markets. And so the University of Michigan actually sells this information to Thomson Reuters, who then people that subscribe to this data feed, and we'll get into it in a little bit, the particulars of it, but for right now, just they sell the access to this data 2 seconds before it's released to the public. So for example, if they announce they're going to release this information at 10 o'clock today, well, 2 seconds before that, they send the data out to people that pay for it, and they're able to trade on it. So now, first of all, the fact is you have to pay for the data. The second is, what sort of system do you have sitting at home that allows you to receive the data, analyze the data, and in 2 seconds place trades to benefit from that? I mean, these firms are wired tight to the data, and to think that you can go out there, sitting at home on your iPod, not your iPod, your iMac or whatever it's called, or your Windows computer, and trade like these firms do. I mean, it's just ridiculous to think that you can. All right, so economic reports from public universities like the University of Michigan, trade groups, other non-governmental groups they can move the markets the same as the releasing of the Fed minutes. If you recall, a couple weeks ago, we talked about how someone in the Federal Reserve accidentally leaked the minutes of the Federal Reserve meeting the night before to certain people. Well, that governmental releases are governed by strict rules. The release of non-public information, for example, if you're the CEO of a company and you know that your company's about to get bought out, leaking that information to someone else is illegal. Trading on that information is illegal. Just ask Martha Stewart. Of course, well, I shouldn't say that. Martha Stewart was actually convicted of lying to the FBI. She was not actually convicted of insider trading, but that's how it started. So trading on non-public information is illegal. Of course, as you know, if you listen to the show, that trading on that information by members of Congress is not illegal. That they did pass a rule recently to try to help quell some of that, but members of Congress that sit on heavily regulated industry panels like medical or tax committee, they can trade ahead of this. As we saw in the financial crisis, people on those boards trading ahead of the information. So you have all these people, you have people illegally doing it, you have Congress and people in the government doing it legally, and now we see, well, you may have already known this, but we see that people are buying access to the data that is public. They're getting it early. So this is perfectly legal. A couple other studies, the Chicago-based Barometer of Business Activity is another big survey that gets released. The Institute for Supply Management is another big industry publication that releases data to the public, and they sell the data to people. The CEO, or I'm sorry, the chief operating officer of this Infinium group said it's not an exclusive club, and he said his firm needs to have this information in advance to keep from getting flattened by other futures traders. So the competition for this information, just a few seconds, is very intense for these trading firms. So now let's get into some of the details here. So Thomson Reuters, which is a news organization like Wall Street Journal, Dow Jones, Bloomberg, like that, they pay the University of Michigan $1.1 million this year for rights to distribute the findings. Next year it's going to pay $1.2 million. So they pay $1.2 million to the University of Michigan for the right to get this data, and they get it a little bit early. In Thomson Reuters marketing materials, they promote that they offer paying clients an exclusive 2-second advanced feed of the results designed specifically for algorithmic trading. Well, that brings us up to our first break. We hope that you'll come back for the next break, because we're going to get into talking about how much it would cost for you as an individual to buy access to this 2-second early data.